How to price products for your e-commerce or Shopify business. This might be one of the most useful and important videos I've ever made on this channel, and I encourage you guys watch through the entire thing because every piece of information here is going to be critical in the success of your e-commerce or Shopify business. If you're not already subscribed to the channel, please consider subscribing. Lots of information on this channel to help you be successful in life, and hit the like button if you enjoyed the video. Let's say you're starting a Shopify business, you're starting an e-commerce business, you've already started it, you've got some questions about pricing your products correctly. Or you're running a successful business and you haven't really asked yourself, how did I price my products? Because there is a very, very in-depth formula, what you need to do to price your products. And what this is also gonna tell you is it's gonna teach you how to do product selection, because what you can do is you get your price based on the cost of good to you. There's a bunch of things you need to factor in. And then what you can do as you're trying to figure out what products you wanna sell to, and we'll get into the pricing in a second, I just wanna say this little bit here. You can figure out where it's selling elsewhere, and you'll know that they have a proprietary relationship and they're getting the product cheaper than you, and you just can't compete because you can't cut these costs. So this is how to price your product and how to actually set the profit margin, but how to understand the total cost of goods for you and how to run a profitable business. Step one, your cost of goods. This is gonna be your cost landed to you or to your customer per item. I say landed because your cost is not what you're just paying the manufacturer, it's what you're paying in shipping divided by your total units, what you're paying in processing if you're using Alipay or PayPal, and what you're paying in duties or taxes depending on your situation. So it's not just the cost per good that you're paying the wholesaler or the manufacturer, it's the total cost landed. So let's say you pay $10,000 to get X amount of products. You do $10,000 divided by X amount of products, and that's gonna result in the number that you need, cost landed per good. That's gonna work whether you're drop shipping or housing the inventory yourself. It is your cost of good landed. The next is your cost of packaging per good to your customer. This is gonna include, if you're housing products, boxes, packaging, labels, everything under there, tape. If it's drop shipping, it's gonna cost anything in additional costs that you're paying to your manufacturer for branding or anything like that. Because it's more in depth if you are doing your own business, this could run from, I know most of my products I pay for U-line boxes, I do 3M shipping tape, I have a label maker, which you should average your cost in, but I pay per label, I have a cost, per tape, per box. I have bubble wrap inside for most of my shipments. And what you need to do is you need to understand how much does each piece actually cost when you're calculating your product, and that's gonna be your total cost of goods and shipping on your end, but not the actual process of shipping, just the cost of shipping materials. For me, it cost me about 97 cents per box, cost me about 4 cents for the tape, cost me 40 cents for the bubble wrap, and it cost me about 3 to 5 cents for the label, depending on if I do the average over a given time and how many international products, because you have to have more labels for custom forms. But let's say 4 cents per label. Now you need to do your own calculations because I'm buying different quantities and I have different box sizes and all those things. But so far you have your cost of good landed to you or to your customer, and you have the cost of shipping materials and anything that you're adding from a product perspective to then actually package your product. Then comes shipping. So this can work both ways. Whether you're drop shipping, you're gonna have a drop shipping fee to your customer, or you're shipping from your own warehouse or your house and your studio like I'm in right now with all my products behind you, you're gonna have a cost to ship to your customer. What I like to do when I'm initially preparing and understanding the cost of my product, wherever I am in the US, I figure out where the furthest spot is in the lower 48, so we're not counting Alaska here or Hawaii. I figure out where the furthest spot is, I understand and I estimate the cost of shipping from me to that spot with my average good and how much it weighs and the package size that I've determined, and I use that in my calculation. So if it gets cheaper because somebody's gotten closer, I save a little bit of money and my profit margins go up. But I base my product around the worst case scenario, and I've learned to do this over time because I found that, like, I'm in Boston right now, I've been surprised that some of my products sell really well in California, and I have certain products where 99% of the products that I'm shipping out are actually all going to Cali, and that is my most expensive state to ship to, so I'm glad that I priced my product around that. Now, if you're wondering how to price your product, you can actually use free calculator tools, whether it's on UPS, on FedEx, on USPS, or you can go through third-party providers and they'll do like shipping cost estimators and stuff like that. Now you've theoretically landed your product to your customer. You're paying for the cost of good landed to you, the materials for the product to get to your customer, and the shipping to your customer. You might think you're done. You're not even close. Now, are the back-end costs. Usually this can be pretty simple, but sometimes there's fulfillment costs. most of the time people don't have fulfillment costs, but what they do have is they have the cost of actually processing the payment, which is about 4%. So what we're gonna do is we're gonna take the three costs that we've put together right then, we're gonna add 40%. We're gonna figure out what an additional 40% of that cost is, and then we're gonna figure out what 5% of that is, and we're gonna loop that back into that cost. So let me say that again. We know what the total cost is to get our product to a customer. We're gonna add 40% of whatever that value is in addition, because we're trying to bake in a 40% profit margin. You may not actually get that, but we're creating fat in our product, right? We're creating redundancy. Then we're gonna take 5% of that, which is an overestimate in itself. It's usually 3 to 4%, depending on what kind of card processor they're using, what kind of card they're using. And then we're just gonna add that to our normal cost. So for example, some of my products that sell for $100, I'm just gonna loop in $5, right? Just looping in $5 just to process the card in my total cost to my customer. And that is essentially it. Where the only thing you then have to add money onto, but I choose actually not to do this because I wanna understand this on the back end, is your cost of marketing per good to sell to a customer. Now, most people will tell you to do this, but I think marketing costs are so variable to your skill set on what it costs to actually run ads, and it changes so much even if you're good at running ads, that you need to just understand per ad set what you're doing and your cost and whether an ad set makes sense versus selling your product that way. But with my rule of thumb is all the things that you've added, right, that we've added so far, so those 4 items, you then need to make sure you have a 40%, minimum 40% profit margin, unless you have a very high dollar cost of good. You want to have a 40% profit margin. My rule of thumb is from $0 to $65, you have a 45% margin. $65 to $100, you have a 30% minimum margin, and then anything over $100, you can sneak down to the 20 to 25% margin just because you're upping the amount of dollars per sale. And that's a rule of thumb, but it doesn't always work. And essentially, that's how you're gonna price your product. Then it is up to you to figure out how to run ads or do whatever you're doing within your marketing scheme to then sell the product while it's still at a profit. Obviously, pricing your product so you have bigger profit margins gives you more room, but here's where everyone fails, and hopefully you've stayed this far through the video, is an item called redundancy. What does redundancy mean? Redundancy is a percent increase in cost on your product costs that will loop in all the times you have to do returns and you lose money, you have defective products that somehow have slipped through and you have to return it, you lose packages in the mail, you fight the battle and you lose the insurance claim from your carrier, you have somebody try to scam you and they end up with the product and you don't get the money. All those things happen. They happen more often than you think. They happen so often that you need to build that into your product pricing. My rule of thumb here, this is gonna sound crazy, 10%, right? This is critical, 10%. Why did I leave this to the last bit? This 10% is very critical for anything under a couple $100. As you get more expensive, you're obviously gonna fight some of these battles at a higher level. You know, your occurrences are gonna go down because your volume is gonna be higher. That is like 5 to 10%. But anything under, let's say, $200, you should have a 10% margin in there for redundancy. What does that mean? You need to figure out what your cost is and increase it by 50%. 40% of that is gonna be profit. 10% of that is going to be your redundancy. Again, more often than not, that's gonna end up being dollars in your pocket for profit, but when it does happen, it helps insulate you against problems with the mail or whatever happens where you're gonna lose money in your business. Hopefully, I just gave you guys a wealth of information that's gonna help you run successful businesses. What a lot of you guys, if you watch content like this online, especially on YouTube, you're gonna tell me, there is no way that's even possible. And that's because you're listening to people that don't actually run businesses like this, and they tell you that you need to have a 10% margin and it's not possible to have more and you have to like change your website and do all these stupid things. It all comes down to product selection. If you can't have those margins, you're not gonna be successful long term. One thing is gonna sink you, right? You have to have those margins long term. I've started multiple businesses like this, and those are margins I operate on a regular basis because I have to. And I don't feel like I have high enough margins, and I'm rocking between 40 and 65% profit margins on most of my products. And I'm uncomfortable with that. You know, it feels like it's not enough. So long term, and I've been running this business for years, right? And it's a pretty diverse business. So I guess what I'm saying here is that is the rule of thumb, and that's how most people and most large organizations are pricing products. Hopefully that doesn't sound like a surprise to you. And if someone's telling you to do that otherwise, challenge them with the math. I just broke it down with you, and all those things are very reasonable. Those are all things that you'll experience if you're running a business. If you already are, you're gonna be like, I got it. I know all those things. And maybe you didn't know how to price the product correctly at the get-go. Well, there you go. If you haven't started yet, those are all the things that you're gonna experience, and that's how you price a product, and more importantly, select the right product. Because if the math isn't adding up and you're like, Walmart's selling that for cheaper, it's not the product that you should be selling, or you need to go to a different manufacturer and get it cheaper. There's no wiggle room in that. And a lot of people fail. It's funny. I find a lot of people, they start these businesses, they sell some of them, and then all of a sudden they realize their cost, like they're losing money essentially. They realize they're losing money. So then they have to raise the cost of their product, and all of a sudden it's way cheaper on Amazon. And I'm like, what's going on? And they're like, well, like, what the heck? They're like, how is that even possible? And I'm like, you didn't do the math at the front going at the forefront, and ultimately it sounds like you're not getting the cheapest product, or you're not able to compete on that product cost like a larger company would do, or the company that's actually manufacturing the good. So there's a lot of nuance there, but this was exactly how to price your products for your Shopify or e-commerce business. I'll see you guys in the next video.